Alright everybody, so thanks a lot for joining me as at the close on Wednesday. You can see here, this is the chart of the S&P 500. This is the second day now where we have seen again another somewhat spinning top type of candlestick after the original push that we got on Monday. What this is doing is now breaking above those mid-March swing highs, which is very favorable. And not only that, we've also shot or overshot our 2,865 target on the S&P 500 to the upside. If all goes to plan at the moment and the markets continue to trend, which is what they are really looking to do, it may just be this sort of grind higher, this rather ugly sort of grind higher, whereby we don't really see all that many whites, ordinary or even long day candlesticks. We might just see a consecutive series of sort of gaps to open each day's trading session, whereby we're just left with, again, spinning top candlesticks. But this can really continue up until the point where we take out or at least come back on up and retest the late September 2018 swing high, not to mention, of course, that little second relevant high that we established in October of 2018. We still have roughly, if you just take a look at the screen right now, coming on up here, we've still got roughly 60 or so points to go on the S&P 500 until we get on up to about 2,926. That is our next target on this particular index. Obviously, there is a difference between the open of Friday and also Monday's candlestick to begin the week. It has left us with a little bit of an open window, but I just wanted to point out a couple of things. First of all, this is a continuation type of gap. So even if the markets do collectively pull on back down into this open window range, it is going to be, again, another buy the dip opportunity. I'm not stating whatsoever that it has to happen. Generally, these market windows will actually close. It's something to think about if, in fact, you do get an outside day candlestick or even a retracement back down into roughly 2,830. At this particular point, however, when I bring up the exponential moving averages, you can see that we are still continually pushing off from and bouncing off from the rising exponential moving averages. On my screen right now, you've got 1, 2, 3, and 4 instances of this. And again, if you see this occur back down into the support area at the open window, it is going to be a position or a location on the chart where traders are going to actively jump on back into directional plays on the markets as they continue to trend higher. You've got the NASDAQ today leaving us with a little bit of a doji candlestick up very close to 50 points on the NASDAQ. You can see, if I can bring this down into position for us, we're getting very close to that psychological round number of 8,000 on the NASDAQ. And again, if I can move my chart over to the right a little bit, you can see the all-time high that we established in 2018, taking us all the way back to the very early period of September. If not, if I move the chart over a little bit further, it really established itself in the month of August over here. So, I mean, we're getting very close. If I can drag this on over, we only have, it's really rather marginal at this particular point. We'll call it 8,100. So we're trading here very close to 7,900. We don't only have really 200 points until we come back up to the all-time high. And again, what you can expect is the market to stop, to slow, even potentially pull on back down. And again, very similar to what I just spoke about on the S&P 500, it would establish that of another buy the dip opportunity as we sell on back into those rising exponential moving averages. The markets, again, although we're not really seeing long white day Morobozu candlesticks or even just ordinary candlesticks, again, today's a good representation of that, being that of a doji, we could just continue to see this as we drift on up to roughly that 8,100 level on the NASDAQ as well. Now, I wanted to point out to you very quickly on the Dow Jones Industrial Average, we haven't really got the breakout above that swing high mark of Monday's trading session. I think intra-session today, we sort of popped our head above it, but we pulled on back down. We only closed up 39 points, but we're still holding up above the swing highs back in the month of February over here, and also in the earlier period in the month of March as well. So, I mean, this is starting to look like that of a sort of stair-step continuation type of pattern. If we do see a legitimate push above that of Monday's high and even really the high of today's session, we could see a rather explosive move back up to 26,664. So as it stands, very much so bullish on the overall market indices themselves. Again, we've got that open window between Friday and Monday. But the good news really as well, when you think about Dow theory and the industrial average, when I bring up the transportational average, it has been somewhat lagging that of the industrials most recently. And I have been keeping an eye on this just for sort of intermarket confirmations. And really over the past 1.5 weeks, we have seen a very strong push to the upside. If I bring out the weekly chart, you can see that sort of reversal bottom candlestick from 2 weeks ago now. And even during this week's sort of weekly candlestick at the moment, we're still up over 200 points. We've got 2 more sessions to move through. Volume is somewhat trailing off. Obviously, we've got 2 more sessions to account for in this particular weekly candlestick. But when I bring it back into the daily time frame, you can see that we are starting to flinch retest and potentially break above the swing high. Yes, we were left with a doji. It is very close to that of a shooting star type of candlestick as well. But again, expect volatility if and when we come on back down to close those open windows. Otherwise, you've got the trade breakout trigger here at 10,780. That's been there for quite some time. This is really confirming that sort of hypothetical inverse head and shoulders pattern, even though technically speaking, it's not really in the right location. And it does give us sort of a blanket of air, even on the transportational index, to take us all the way back and up to the past all-time highs in the month of September as well. So these markets, again, are poised to move higher. Don't fight the trend. Understand the trend direction is up, all right? And then just trade in the direction of the trend. We've been establishing long positions across the markets for quite some time. Yes, we have been in this sort of sideways consolidation type of state for about 1.5 months now. Yes, we were looking for the markets to pull on back down into this green rectangular box to really confirm and shore up that inverse right shoulder. Did it play out? No, it didn't. Do we have exposure on the long side? Yes, we do. Okay, and the reason for that, and I'm bringing this to people's attention, obviously they haven't been listening to me digest market activity or even set up essentially trade setups through technical analysis. But whenever you see these green sort of default lines on my screen, these are the directions of the prevailing trend and our entry points in the market. So you can go back. Very, very rarely do I ever change them. And when I do change them, it's for a reason. They're only changed in that pro analysis class. But you can see at points we've got sort of bidirectional trade setups, obviously one of which never triggers. And then we just trade in the continuation of the trend if, in fact, it is at a higher price to where ideally we would like to enter into. I mean, ideally we would have liked to have entered into the market at lower prices. Did the market pull on back down into this green rectangular box? No, it didn't. But we still have exposure and we're still adding to the original exposure that we've been accumulating for really the entirety of this bounce off from this macro primary trend line going out into the monthly chart, okay, that we really came on back down and tagged into in the month of December. So we've got this really nice bounce and we're still, of course, trading bullish. We haven't deviated from our big macro stance of the market whatsoever. So I just wanted to point that out to you. Pay attention, the green lines, the default lines on the S&P 500. These are three just here, okay? Trading in the direction of the trend. We wanted it, ideally, to retrace back down into lower areas. Did it happen? No, it didn't, but we still have the long exposure, okay? So we're still sitting back, and we're essentially just harvesting those profits, or at least letting them continue to build as the market continues to drift on up higher, even if we don't have the opportunity to re-enter dollar cost average a little bit, even into those option positions, because the market hasn't pulled on back down. The NASDAQ, here you go, one here, and most recently 7,667 over here. Here we are, we're trading up just shy of 7,900 at the moment. So take your pick on the markets. They're all working out very nicely. Again, you can see the trade direction for Apple, for instance, 171, 175, 178, 188. All right, the higher Apple moves without a legitimate pullback or correction, obviously the odds of that of a sort of a losing trade go up. However, at the moment, Apple is making us all very happy, and it has been making us happy really since, if you go all the way back to January when we were talking about the exhaustion gap over here, the first entry was down at 149. We're trading at 195 at the moment. Okay, so Apple looks to be, all right, gaining a little bit of traction, up $1.33 today. Still looking at Apple moving all the way back and up to about 215, but ultimately, and I was saying a lot of people, you're going to probably think I'm crazy down here, but coming all the way back up to 230 and ultimately taking out the swing high. There's adequate gas still left in these markets, and this sort of expansion that we find ourselves in, even though it is slowing, to take out those all-time highs and to continue to trend it to 2019, which I've been saying, is going to surprise a lot of people who are talking for a terminal big macro sort of reversal on the markets. It is a little bit premature in my opinion. We still have quite some distance to move higher across the board in these market indices. Apple again, Amazon up $6.72. We're getting very close to that 1835 sort of breakout. We've essentially been long at 1524 most recently. Bollinger Band, squeeze at 1681. This was the most recent entry here at 1787. We've got the 1, 2, 3, and now the continuation. If we get a legitimate move above this swing high over here, this is going to be a fantastic trade once again to add to those hopefully original positions, either down at 1681 or 1787.90. So Amazon's looking pretty good. Boeing Airlines is pulling back a little bit, down $6.01. We spoke about reducing, all right, the amount of capital generally through the risk and money management principles, but that's okay. It's still profitable at the moment. You're going to have to sit through probably a little bit of volatility, but overall, you should see this stock come back up to $415.90 over the coming months to close that open window. We were speaking about Baidu potentially waking up on Monday. And as you can see, we're just continuing to the upside, up another $3.93, closing at 174.91, above the 174.21 entry. Now, this is good. If this is a legitimate move, you can see Baidu move very quickly over the next 1 to 2 months, probably all the way back up to just shy of $200 per share, up here at about $191 on my screen at the moment. Caterpillar was another stock that woke up earlier in the week, and really on Friday last week, in fact, 135, right? Remember the green lines. And 136.66, we're up here just shy of 140 at the moment. So it is slowing around this resistance area. But the good news is once we definitively break above this resistance area at 140, sky's the limit up to about 155 on Caterpillar. Now, COP is pulling back again. This is fantastic because, again, when we broke down the markets and we were speaking about, well, it would be great to see them come on back down into this area to confirm the right inverse head and shoulders before, or at least adding down at the best sort of price you could get on the market at that particular time. COP is doing something very, very similar. We're coming back down to retest this primary bullish uptrend. If you look at 2016, we've got 2 fan lines on this stock. Okay, and really since the sell-off even in the month of December, okay, when you take into consideration this big write-off in the stock price and the market cap of the stock, we're still holding above essentially that first decelerating fan line. Now here we are, as at the close on Wednesday, we're coming back down into it at 65.51. We've had all these green rectangular boxes giving us opportunity, or you opportunity anyway, to understand that this is a period of accumulation on COP. Even though the candlesticks on Tuesday and Wednesday look relatively ugly, there is a very high probability, and I'm very excited about this, that once we do get through the end of this selling and we establish a couple of white candlesticks, this could really, really explode or rocket off from roughly that 64 handle. It may even come at 65, but ultimately down as far as 63. So this is getting into that sort of into the area of confluence, that support confluence, whereby it becomes particularly interesting to follow along with once you see the reversal to the upside. So pay attention to COP. Not sure exactly when it is going to come, but there is a very high probability that it is going to come more or less from current areas. CVX is more or less still moving sideways. Pay attention to the Bollinger Bands. They are starting to squeeze price, but at the same time, we don't have a definitive directional movement. Disney is still continuing above 111.66, $111.68. A little bit of an inside day candlestick today, up 56 cents. But at the same time, we're still really contending with this resistance area, which is coming in across here. If I can try and draw that of a horizontal line to the best of my ability using my mouse, you get the picture anyway. So still interested in that Disney move. You've got Google taking off again, $5.27 today, had the entry, 1,191.60. This is after, all right, the directional movement at 1,156, and unfortunately a little bit higher at 1,212. We just had to be a little bit patient. We're more or less back at that final entry point at 1,210, or 1,212, I should say. And things are looking good. We're still technically trending, much like the markets in a bunch of individual stocks. We're bouncing off from those rising exponential moving averages. Target on this trade is up here at 1,270. IBM continues to tread water. Personally, I'm not in IBM. But as you can see, I mean, I was a little bit suspicious of it during this particular moment in time over here. When we started to see the rollover, again, we identified the green rectangular box down here. Boy, we said it would be a great opportunity to buy down at 123, 124, 122. Did we get here? The answer to that question is no, we didn't. However, some of the people in Pro have got these open orders at 141. And most recently, even though I tried to talk them out of it a little bit at 142.71, we're up here above 143 at the moment. So again, you're trading in the direction of the trend, even if it comes with a little bit of, in my opinion, higher risk on this particular stock. I just accidentally moved my resistance area. So there we go, just moved it back down, which is good, just undid. So I was trying to sort of move the chart. And to really conclude with at the moment, we've got Netflix. If we go to the weekly chart, up $13.19 at the moment. We're getting very close to breaking out. It's been acting a little bit sort of indifferent at the moment. It's been a little bit of a drag. It's just moved sideways. We've been paying attention, to the Bollinger Band squeeze. We've got a sort of a fake sort of breakout last week, or 2 weeks ago, very similar to what we originally saw in Amazon. So we got that first little move above 1681. We got the pullback back down into support, and then boom, off we went. Now that could be really establishing itself or setting up right now on Netflix. We've got the false break back down into support, and now we're starting to build traction, right? So I mean, keep an eye on Netflix. If it starts popping above 381, there's a really good opportunity for this stock to ultimately, over the next coming months, to come all the way back up to about 420, you could say, 421, 422, up in this area, which would be ultimately that little double top that we established in June, July of 2018 as well. So that's a little bit of a market recap as at Wednesday afternoon, everybody. If you have any questions, email me, success@pivotpoint-trading.com. Until next time, everybody, trade in the direction of the trend and just sit back and allow the market to work for you. All the best, everyone. Goodbye.